Hey, everybody, Tom Gentile. I want to welcome you to our Monday Money Morning Update. It is August 17th, 2020. Glad to have you guys all here. I am just logging in, so let me know that you can hear me, and see me live on the screen before we get going. I'm kind of realizing that I have to do this every time we're together because the last thing I want to do is get started and then find out that I'm talking and nobody can hear me. So if you can hear me, please let me know. If you can see me, please let me know. Awesome. It looks like we're coming in loud and clear. I have a low-res image of myself, and it looks like I'm in a dark room, but I'm actually not. I'm in my podcasting center here, and it looks like we are ready to rock and roll. So a couple things I'm going to do here real quick with you. Let's go ahead and share my screen. I want to go through stocks, bonds, currencies, commodities. We'll take a quick look at FANG. We're going to also look at trading what I call Alpha 9 Darknet signals as well. And I have at least one. I have two, but definitely one live case study that we can all take a look at and get an idea of how we look at the options that are best for this particular setup. Now, you can check out all of our videos at Tom's Trading Room. That's the YouTube channel, youtube.com/Tom's Trading Room. I recently, very, very recently did one called Trading in a Van. All right, so I'll set that stage for you. I'm in my van. There I am. I'm not having a good morning. All right, the power went out. I got to take my wife to the doctor, and so I decided to grab my trading gear and go at it and just talk a little bit about what I've had to go through when doing this. And so kind of showing you there, and I do a walkthrough. I even do a walkthrough. Everybody was asking about the van. So I did a walkthrough of the inside and outside of the van. And then what I did was I jumped into actual trading from the van. As you can see, I'm using the TV here as another monitor. All right, because that's what these TVs are good for. And then I actually go in and I show a live case study. But check it all out, guys. I put the link out there for all of you to take a quick look at. Let me pop it out there once again, and let's go ahead and get started. So I'm going to get rid of that. So I want to talk about what's going on with this overall market. Okay, stocks, bonds, currencies, commodities. We'll also go into FANG after earnings. And then I want to do what I call trading the triple stack. That's our plan for right now. All right. Yeah, and I'm trading in a van down by the river. For those of you that were, hey, it was going to come up. It was going to come up, guys. All right, so S&P 500, you can take a look here. We seem to be running into some resistance as we're coming very, very close to these all-time highs for SPY that occurred back in February. The other thing I want to mention is take a look at the volatility. The volatility, the options implied volatility has dropped back down into the teens. How far back do we got to go to see this? I'm going to go back. Let's go 120 days. All right, so I'm going to change the chart to 120 days. And let's get an update on that. I mean, if you see, actually, I got to go a little farther because this only takes us back to 227. And if I go back 150, that's really going to shrink the chart. And I'll go back, I promise. Yeah, this is what I wanted to show you guys. What I wanted to show you was take a look, all-time high, which we're on resistance right now on all-time highs right now. But more importantly, take a look at where volatility was back then. This is volatility for the at-the-money calls and puts that were in the 7 to 30-day expiration range. So basically short-term options. And as you can see, they were trading here near 10. Now we are approaching all-time highs once again, but the options implied volatility is trading at above 15. So it's 50% from 10 to 15, still 50% higher right now than where we were back at the beginning of the year. All right. So let's get back to the 70 days, and that just opens up the graph a little bit more so that you can see what I'm seeing. All right, that's S&P. What's the bond market doing? Bond market's getting a bit of a rebound. All right. I have to mention on Thursday, we were looking at Thursday. I think it was Thursday night, Friday. We did a video on seasonality. Yep, seasonality on Thursday. We were discussing seasonality, and I said this last week with all of you that we had the Labor Day weekend coming, and we were discussing seasonality, and we were seeing seasonal moves in the stock market, but also in the bond market. And so I went back and looked at that, and Thursday was the day that we had the actual start to a 100% move up in bonds over the last, not 100%. It was in the 90s or the last 15 years. And so that was triggered off of this day here. So we're slightly ahead of it now. I expect to see bonds come back. I think it was overdone. We came down into a really nice support area around 162 or around 163, excuse me. And if you look, this area right here, which is around 167.5, is a very good area for resistance. If that gets pushed, then we're back up into around the 171 area. But this is all based on the Labor Day pattern that we talked about last week. Let's move forward. Today, bonds aren't doing much of anything. They're slightly higher. Actually, they're quite a bit higher than they were on the close of Friday, as you can see the pop up today. UUP, all right, that dollar, which continues to go lower, which means everything else is continuing to go higher. So think about this, all right? Take a look at the stock market. Take a look at certain stocks in the stock market. Commodities are getting the biggest bump right now. Commodities and Bitcoin are getting the biggest bump off the U.S. dollar. So the U.S. dollar had support points below 26, then drop down. We've got another area, which is, I'm calling this now, support becomes resistance. Support becomes resistance at around 25.15. We're currently trading at 25.10, just off 25.10, and there's your lows at 25, all right? The way this chart is looking, we're going to be down in the 24s here within the next couple of weeks. That would bode very well for those of you that are long stocks, more importantly, long gold, all right, long commodities, and long Bitcoin. We'll take a look at those in just a moment. Let's move forward to USO, another benefactor of a dollar that moves lower. All right, dollar's been moving lower, but look what's happened with oil. Now, this is the ETF for crude. It's USO, all right, USO back in May was trading below 21. We had a big pop. This was an option trader's dream right here. To in the middle of May, buying the 30-day options on USO really just really exploded. And we're talking about 21 to 29. That is a big, big move. All right, take a look with me here. So 2, 4, 6, 8. All right, that's 8 points. That's 20, 40, 60. That's 80. I mean, if you take a look at that, that's a 40%. 40% move off this 21 low in 30 days. That's big. Since then, we've been wedging it out here, all right? A bullish triangle pattern, which really held in force, had a little bit of a pop-up, but once again, but now we're coming back up to what is yearly highs, and we are now above and have been staying above the $30 mark for some time. Gold, there we go. All right, so take a look at gold. All of you been, you're no stranger to me owning gold. And as you can see here, gold ran into its bit of resistance. This was last month, all right? At around the middle of last month, we were around 170. Big pop up to 195. Then we had a drop, a huge drop. This was big profit taking to happen as the U.S. dollar made a little bit of a move to the upside. But since then, we've broken. All right, we've broken this drop down. Today is a big, big day for GLD as it has gone above the resistance from last week. And now we're clocking in and moving higher back up to those all-time highs, right? That's GLD. So let's take a look at, and I've got to open up a chart again. All right, this time I'm going to log in, and I'm going into my crypto tools. So jumping into Tom's Option Tools, here's crypto. This is AST. This is AirSwap. I'm not interested in that right now, although that looks impressive. What I'm more interested in is BTC, the chart of Bitcoin, which is now, take a look at this. Here we go. This is what we've been waiting for, guys. Again, let's take ourselves back into last month as we were trading in the 9 to 9,500 area. And this was a good little wedge here. Started creeping up. 9,500 became the support. I was buying in this area. All right. Now we're up here and we're now hitting new highs, 12,348 for Bitcoin. And that means if Bitcoin's moving higher, that means all of the sisters along with Bitcoin are probably moving along with it. So let me go to Coinbase Pro. So we have crypto source lists. We look at all cryptos. We look at cryptos on Coinbase, Coinbase Pro, and BitterX. All right. So let's take a look at Coinbase Pro because it has some of the fewest ones. But if I look here, I can look at basic attention token, which has gone up. It's a little bit of a pullback since then. I can look at ETH. There's Ethereum. All right, there's Ethereum. Let me bring up the screen a little bit more so it doesn't change so much. So Ethereum kind of come off a little bit. How about Bitcoin Cash, BCH? BCH moving higher too. But the real big mover, which has been lagging of late, has been Bitcoin itself, which finally broke out into new highs that we haven't not seen since early in the year, right? Where do we go? All right, so that's the big question. Where do we go? This actually becomes easy for somebody like me, all right? Bitcoin's got round numbers now. 15,000 is going to be the round number. That was resistance back earlier in the year. You got 20,000, which is the all-time highs. That was set back in 2017. And I'm long this stuff, guys. This is an investment for me. This is not as much of a trade as it is an investment. But I have $15,000, $20,000 on my targets for these. I have no intention of selling any of this. Ripple, XRP, all right? This is a lot of us call this the poor man's crypto because this was a look at what happened with Ripple. If I take this back, let's take this back 100 days. All right. And you can see with Ripple actually was down below 18 cents and had popped up to 32, back to 32 again. This is a 50-cent coin. If Bitcoin runs and Bitcoin rallies to 15,000, this will be a 50-cent coin. Okay. There's so many other ones. Chainlink is another one that I'm in, and Chainlink has done extremely well. I mean, look at this, $4 for much of the year. In fact, just the last couple of months, $4. Hit 20 Friday, trading at 1862 right now. One of the best leveraged coins out there. And all these ones I'm talking about, we've discussed in our cryptocurrency windfalls or our microcurrency trader. Our microcurrency trader publication has been really just kicking it out of the ballpark. But I wanted to share that with you because, again, all of this, there's a lot of things going on with cryptocurrency right now. But a lot of this has to do with this U.S. dollar pulling back. Because when the U.S. dollar pulls back, everything that's arbitrary that you buy in U.S. dollars just goes higher. Okay? All right. So that is stocks, bonds, currencies, cryptos. Let's go over here. And let's take a look at FANG real quick and see what's going on with our FANG friends. So let's go ahead and move forward. And we're going to look at Facebook first. So what's interesting is as this market continues to rally and continues to post up positive numbers, we're seeing pullbacks in some of the stocks that accelerated early on. Facebook's high was over a week ago, and it was near 280. It's trading at 259.69 right now. How's Apple look? Well, Apple opened very close to new highs. It's pulled back since then, but even Apple has done really well. But in the last week, it's kind of been struggling until we got into that Thursday, Friday area. Amazon's putting in a classic wedge formation right now. So the highs have gotten lower, the lows have gotten higher. This one's going to springboard one way or another. Now, it doesn't have earnings for another 66 days. So it's not going to be triggered off of the earnings. It's going to be triggered off something else. All right. How many of you in here get, I shouldn't even ask this question, I'm going to anyway. How many of you in here right now get products at least once a week from Amazon? You're getting a delivery at least once a week. Because I've seen a pattern that's been happening with Amazon. And the pattern I've seen with Amazon is they're starting to get late on their deliveries. I'm getting more and more emails where something is not coming on the day that they suggested it, and it is being pushed back. Now, that's all well and good when you've got something that you're not in a big hurry for. But if it's a staple good, more importantly, I got a birthday coming up for my son. And I got stuff that I'm waiting on from Amazon that I ordered last week that was supposed to be here last week. Now they're saying it's going to be here today. And my son's birthday is tomorrow. So, I mean, we're getting into crunch time here. Anyway, I'm seeing that happen more and more. I wonder if that's going to be something that is going to work itself into the stock price. All right, because when they're late on their deliveries, if it's a free delivery, it doesn't affect them. But if I'm paying extra money to get something on a specific date and it doesn't show up, you know what they have to do? They have to refund that delivery fee back to me. So if it's happening to me and it's happening to you, it must be happening to a lot of people, and that could be affecting their bottom line. All right, let's move on. Google. So Google had its earnings about 2 weeks ago, and we had a pop on the earnings, but it was dropping after that. And so since then, we've seen Google start to make another move to the upside. This is actually a good sign for Google because Google really, I mean, if you take a look at it, it did not participate in these big moves with the likes of Amazon and Apple, right? But it too is off of its highs and has been for several weeks now. Tesla. Oh boy, this one's just, I tell you what, just when you think they are out of the game, all right? I mean, we're talking, go back to 1,000. There's your resistance. And within a couple weeks, we're at 1,800. Then we're back to 15, 17, 15. And then last week, 15. And today, we're back to 18, and we're about to cross over. And closing above 1,800 would give us new all-time highs for this particular stock. All right. So that is Tesla. So as we go forward, if I were to kind of give you a quick review, S&P still trending higher. Bond market recovery. UUP is definitely confirming that stocks want to go higher. It's also confirming commodities like oil and gold want to go higher. So everything seems to be in sync or in concert with one another. FANG after earnings is getting a breather for the most part, with the exception of Tesla, which is not part of the FANG group, but I show it anyway. And so I'm going to get into something quickly with you here as we get to the end of our program. But before I do, let me just check the boards real quick. Happy birthday to your son tomorrow. Thank you very much, guys. It's not like I have a 8-year-old son. He's 22. He's 22 and he's in the family office, if you know what that is. That means that he actually trades. He actually is more into the short-term trading than I am on the day trade side, and he's also the resident cryptocurrency whiz here at the House of Gentile. But thank you very much for the comments. Yes, delivery is slow with Amazon. That's a good point that they are hiring delivery staff. So maybe it could be because they're understaffed and you just can't get the get these folks on board as fast. All right. Not once a week, but definitely once a month. I mean, more and more we live our lives, and all of you know this, we live our lives now where it's really something else. If you've been in this business as long as I have, you remember when the internet and all things internet came on board, which was in the late 90s. And in the year 2000, they tried grocery, they tried delivery services, and they failed. And the reason that they failed was because they didn't have the money to get through the time of the time of losses. Okay, what I mean by that is a business can only have losses for so long before they run out of money, and that's just not the case this time around because everybody's doing. I mean, things are more efficient, yes, but companies have so much money to burn now because of investors, because of additional stock, additional stock that IPOs that come out. when companies put more shares out in the market, they're just getting more cash to burn through, but their burn is calculated because what they're doing is they're saying to themselves, how much do we need to burn through to get rid of our competitors and to make us dominant in the market? That didn't happen back in the year 2000, all right? But it's happening now. It's been happening in this last 5-year cycle that we're seeing, all right? And yes, I would love to show you guys some real-time stuff, but my Thinkorswim is down just like yours. All right. I will say this: you can get it on the. I saw it on the mobile app. It's actually working on the mobile app, or at least it was. The desktop app was not working. So I'm going to end with this before we not end, but I'm going to end conversation with this. Yes, if I go to my TOS mobile device, looks like it's working just fine. I'm looking to see if bids and offers are changing. Yes, they are. Yeah, the mobile device is working, but the desktop is not. All right, let's talk about trading a triple stack. So trading this triple stack looks like this. We'll go through a couple of quick little ideas for you. So triple stack is something that we use off of a software program that we've created called Darknet. And Darknet actually fuels one of our publications through MoneyMap, which is the Alpha 9 strategy. So when I talk Darknet, think about Alpha 9. All right. So any of you say, "Hey, well, is Darknet like Alpha 9?" Well, it is the nucleus that runs the Alpha 9 signals that we get. So it's similar to Elliott Wave. If you've ever heard of Elliott Wave, then you'll know it's a contrarian strategy. Now we use a contrarian strategy using channels. So what we're doing is we're looking at long, short, and intermediate term channels. Now, where it differs from Elliott Wave is that the signals in Darknet and the signals that fuel Alpha 9 are what we call steadfast. What that means is that they never change. If you've ever used a Elliott Wave software or subscribe to the Elliott Wave theory, you know that a wave 3 or a wave 4 or a wave 5 are only as good as that pattern holding. If you make a new low or you make a new high, that could shift the wave count. All right, that just doesn't happen with the stuff that we do. We keep those steadfast, either both the profits, both a position going in our favor and one going against us. Because how do you learn? Okay, think about this, guys. As a trader, do you learn from your profitable positions? Maybe, but I learn more from the losing trades than I do from the winning trades. And I have to see losing trades in order to learn from them. Now, this is an example of what a channel collision would look like. So this is it could be any stock, and it starts to create what we have as an uptrend. From there, it's also created a smaller sideways trend, and it's created even a smaller short-term trend. Now, channel collisions, or what we call triple stacks, are when we see, and this is a really perfect example, where we're on the bottom of the long term, we're on the bottom of the intermediate term, and we're closing in on the short term. But can you see all this stacking that's happening on this example? All right, my computer is going to look at it like this. It's going to see this in computer language. And not only is it going to give us that triple stack that's happening right now, but it also shows me how it performed in the past. Here's a buy, here's a sell. Here's a buy, here's a sell. And so these are Darknet signals earlier. These are Darknet signals on a past example using Coca-Cola. All right. What I do is I get a list that looks something like this, and what we call active signals. And I can go in and I can look at these, and I can say, yeah, this one looks good, or yeah, I don't know about this. All right. So I have the ability to go in and look at these. I can sort them by slippage. I can sort them by implied volatility rank. That's great for an option trader. And even percent to double. Percent to double is a tool where we, as option traders, look at a mathematical equation, and we're able to determine how far does this stock need to go for my option trade to double in value. That's what this does. All right. So, example, if I'm looking at Lennox International, and that's a buy signal, and I come across here, what that 4.39 means is that I need Lennox stock to move 4.39% for my option trade to theoretically double in value. So that's what that does. All right. So how about we go forward and see what's going on in the markets today with with Darknet, all right, and how we scan for alpha 9 signals. So let's slide over. I've already got Darknet up and ready to go. So I got Darknet right here. Maybe I just need to update the, let's just update the to the most recent time, and we've got it. And here we go. All right, I got 3. So what happens is I get these signals, and I'll get signals that, in this case, these are signals that are ready to go. These are ones that are saying, it's time to start looking at getting out. So let's look at the getting out ones first. All right, let's start with G. Genpact. Take a look at the signal. This is the most recent signal. Buying at 36. It's saying get rid of it now. It's at 42. GSCS. This is GSC Systems. There was a buy. Now, this will also, what it also does is that if it finds, in this case, it was buying and the stock was going down. And it hit another channel collision on this particular day. So we had 2 signals. We had a signal at 43, had a signal around 38. Well, the sell signal came at 45. So you had a 2-point, you had a 2-point winner on the first signal, and obviously you had a much better winner on the second, right? Alpha 9 actually gives us up to 3 different buys within the strategy. Here's a buy sell on Cubic. All right, let's look at some stuff that we know. FCX, what's that? That's Freeport-McMoRan. All right, now Freeport-McMoRan is like, that thing was down below $10 a share at one time, but here it is with a buy. This isn't a big one, by the way. This was about from $13.25 to $14.21, so a little less than $1. All right, let's move on down. XLE, that's the energy spider. That was a buy right in here, and a sell. Pretty much not. This really looks like a break even, if anything. Just didn't go anywhere. All right. How about a loser? SLG. All right, so SLG had a buy at around 50, and the sell came in right near where it's at right now, 46.62. So, again, looking at about a 3.5-point loss on this particular trade. But again, I'm not about one trade. I'm not about one signal. Okay. I'm not about 1 week. I'm not even about 1 month. Because the time that we take and the back testing we do on our strategies is a minimum of 5 years. All right, so minimum of 5 years to get that. All right, so so there you go. And so let's take a look and see what we got going on. So Shopify looks like one that is giving a signal right now. Wow, the last Alpha 9 signal on Shopify was over 100-point profit. So, and that was the one right here. But we're talking about something that's come up, had good earnings, has pulled back, has created some really interesting support right around the $1,000 mark. Now, this one's definitely going to be not buying a call option. So what I'm going to do is I'm going to look at, I'm going to say, you know what, give me some call option trades. And let's just see if it gives us a call option trade on Shopify. It does. All right, we could all run out there right now and we can buy the September 11th 980 calls for $64.30. That would be $6,430 for one option contract. I think not. All right, let's try something else. Let's look at call. Do we have call spreads? No. But you know what we could do? We could take the information that we learned right now from this. We know Shopify is a signal. How about creating an option trade based on Shopify? All right, so let's go ahead and type in SHOP. All right, so we got to go out to at least September 11 because that gets us out there close to that 35 days. I actually like the 18th better. You know why I like the 18th better? Because the computer's not always right, and the computer gives us guidelines. All right, it's kind of like I was watching Pirates of the Caribbean last week, and remember they're talking about the code, and so it's not rules, it's really guidelines. And that's the way I look at trades that come off of a computer, guidelines. So the reason I like the SEP 18s, for those of you that are asking, is because that's the third Friday in September. Third Friday options are always going to be more liquid than any other option in the month. Let's update that and take a look and see what we got. Oh, boy, there's a lot of them here. A lot of options going on here. All right, so there's the 1,000 calls. I mean, look at the spread on these guys. 61.70 by 64.50. That's almost a 3-point spread. So we would want to look for trades that have a little bit better of a spread. Now, let's think here with me. All right, this is all about thinking. And what I'm thinking is, if the last trade resulted in a 100-point move in the stock, and if the stock's trading around 1,000, then 1,100 has got to be my target. So if 1,100 is my target, maybe that's where I need to be selling. By the way, slippage looks better here. It's about half of the slippage. So let's put a -1 right there. -1. Now, what about the 1090s or the 1080s? Let's look at the 1080s. Let's put a 1 there. All right, so what this is this a bull call spread where I'm looking at buying the 1080 calls and looking at selling the 1,100 calls. That's 20 points between what you're buying and what you're selling. What can we do that for? Let's go find out. So I'm going to scroll down. I'm going to click on Risk Graph. And I can see that this can be done right now. Well, it's got some slippage in it, but the mid price is 550. So if the mid price is 550, then what that tells me is that that's my cost and that's my risk on the trade. All right. So what else is apparent to me? Well, if that's the cost and risk, what's my maximum reward? My maximum reward is over here. See that? $1,450 with a max risk of 550. That's a 263% max profit over max risk. Okay, those are important numbers that I like to look at as I'm putting a strategy like this together. All right, finally, I'm going to come down. I'm going to take a look at the actual graph itself, because the risk graph is going to give me an idea of how good this trade looks if this thing moves. If it stays where it is, I'm losing money. I need Shopify to do what it did last time, move that 100-point move. And it's a very good chance it could break out above this and move even higher. And that's fine. If it gets above that 1,100, no matter how high it goes, this is where I can max out in terms of profit. Okay. And so finally, it's just a matter of, well, how do I place that order? All right, let me slide in. Let's slide in some trade selection here. SHOP on one of my favorite brokers. And let's go ahead and click on call spread. And what am I doing? Well, I'm going to look at the 918. All right, both what I'm buying and what I'm selling. And if I'm going to buy the 1080, and if I'm going to sell the 1100, well, it looks like, look at that. The actual bid and offer has come down a bit. It's 320 by 710. I laugh when I say that, but you know what? It's all about getting it for what you feel it's worth. Okay? And if you feel it's worth that 550, then you would put a limit in at 550. Then you would place that order. So there you go. All right, guys. So that is what I wanted to share with you on our Alpha 9 trading technology that comes from Darknet. Some of the things we've done for our Alpha 9 members is there is also a way that we have an app. All right, we have an Alpha 9 app. In the Alpha 9 app, you can get it on your smartphone. You can get it on a tablet as well. All right, it does all of that, and you'll be able to see the Alpha 9 stocks that are coming in. And by the way, and let me just show you real quick what that looks like. I don't know if you can see it through the camera. I don't know. I'm going to see if I can see it coming through the camera. So let's see if I can see it coming through the camera. All right. All right. There's my screen. All right. Can you guys see that? You know what? You can't. I know you can't because it's a little blurry. That's because I'm not using autofocus. It opens up the camera a little more, blah, blah, blah. CVLT and Shopify are on here. Those two that I was just showing you, all right, they are on here. So the updates that I wanted to talk to you about for 2020 is we now have trading apps for this particular software, which can be part of your Alpha 9 subscription for those of you that are Alpha 9 traders. All right. And I would suggest for those of you asking questions take a look at or go to moneymappress.com for more information on that particular publication. All right. And yes, that trade was a debit. All right. Limit debit. You're still paying for the trade. Even though you're taking in some money, you're paying out more on the option you're buying than you're selling, than you're getting on the option you're selling. So that is a debit order. Okay. And then finally, as I peel out here for the rest of the day, guys, I'll say it once again to you. Let's just go kind of look at a quick summary here. We've talked about stocks, bonds, currencies, commodities. We've also talked about what's going on in the area of FANG. Okay. We talked about the area of FANG. We talked about gold. All right. My target on gold still remains the same, 200 on GLD to 250. All right. What else am I looking at? Bitcoin. My Bitcoin targets are, and these are simple targets. You might say, oh, anybody could do that target, Tom. Of course anybody can. We're in an area now where we're looking at round numbers. Okay. This isn't technical analysis when you're making new highs that you haven't seen in a year. This is all technical based on round number resistance, and round number resistance in the market, as you see, you'll find that round number resistance is in the area of 200 to 250 for GLD. It's also in the area of 15,000 to 20,000 for the Bitcoin. Okay, last. Because I just simply don't have the kind of time that I want to share with you. I have, you can take a look at all of our other videos. I'm putting out there right now my latest video, so take a look at the, I put it out there 3 times as nice. You can see the link there, all right? Click on that link. That is the latest video we put out with a trade case study and option case study. What is it? Well, you got to go look at it on the screen to find out. And if you like to get all these videos, then subscribe to our channel, and you will get them as soon as they are uploaded. All right, guys. All right. Hey, thank you very much for joining me, and the fine folks over at Money Map Press. I want to thank them for setting this up, and as my publisher, you will be getting a recording of this sometime later this afternoon. All right, guys. Thanks for joining me. We'll see you again next week. Bye now.